Hey there, welcome to the channel. So looking at some of the stocks today. So the stock market was off a little bit today, but there was some kind of interesting things starting to happen. So if we look at the Dow Jones, kind of was down 1.78%. It's kind of a bad bar here. And if you kind of look at it, we're sort of in a situation where it sort of looks a little bit like a head and shoulders. You have this here, you have the left shoulder, you got this head, you did come up a little bit higher, and then you have this right shoulder, and this kind of would be maybe a little kind of a better type of a pattern from the point of view that this over here on the right shoulder like was weaker than the head and also weaker than the other, so it's not symmetrical, so that kind of points to that. Now here, we see we've had some lows all the way down here, but what's going on is that's kind of approximately where your neckline is, and this I don't know how important that pattern is, if it really will be important or not. I mean, it's hard to say. And then if we look at the other one is, let's look at the S&P, see what that one did. Now the S&P, this had come up and it had failed at the 50 several times in the last couple of weeks. And this is what I'm calling my new pattern. It's called the smiley face pattern. See, you came up here, you failed off the 50, you tried again 5 days later and failed again. So this is interesting. These are almost like, on the bottom, they're called baby bottoms or whatever, and candlesticks. On the top, they're kind of like it's sort of like an abandoned top. See, the thing is, you had gapped up, you gone, but then you just, on the next day, you failed to get back up there. Now the wick kind of touches, so it's not totally an island top. I think that's the one, island top, but it's a very short term. And then it happened twice. Here's almost another island top, except that it did that. So watch out for that one. And then today, we were down 2% on the SPY. So definitely more selling coming in. It's kind of a mess. But the bigger picture is looking at gold. And I was surprised because I was listening to Peter Schiff, and he's always like gold, and the thing is, not going to be critical, but he's more of like a stopped clock. A stopped clock is always right twice, twice a day. That's an old school analog clock, right? But look at this thing. Look at this breakout. This now is on a weekly chart. This is a very long-term chart here. So, we've been in this thing for a year and a half. We've been in this huge consolidation, and it's kind of wedgy, like a type of a wedge pattern here. And look at it, the last, really this week, as the trading that we have this week, this thing is popped out and broken out of there. So that's kind of interesting. So, this would imply that with the concerns over the Fed raising rates, the issues with, is Russia going to invade Ukraine, and all this other kind of nervousness going on, is gold finally picking up a little bit? I don't know, maybe. So that's interesting. That's a serious possible kind of breakout on that. So that's worth paying attention to. Now, the flip coin of that, the dollar's been going up, except it's, as I said, we had this, huge base, right? This is just, huge, year and a half again, kind of huge base. But what we see is that, it's kind of been stalling the last few months here, right? This whole period is kind of stalling, but I still don't see it like totally breaking out. If you look at it, hey, have we broken the trend line? What have we done? I don't know. I mean, if I look at it and I try to draw a trend line on this weekly chart, I mean, it still looks like a trend line, right? It actually sort of looks like a rising channel. So what you have is, boom, you're touching that. It's a rising channel. So the dollar is still kind of going up. Now, yeah, we've had a weak period here, and, we really had a strong week here, down here, but it's still kind of in the channel. And so this is kind of interesting. What's the setup going to be here? Is this going to be a situation where we're going to move to one of those periods of times where the dollar and gold are going to go up together? It has happened before in the past, and maybe that's what's going to happen here. So that's, to me, the most interesting part of what is going on this week. And we'll see how tomorrow, Friday, closes up. So, and then we'll just check the rates here. You know, the rates are pushing up as we've shown many times before. They've kind of come down a little bit, but in the big picture, you know, the rates are going to have to come up to reflect what's going on in the Fed. Let's just check what ARK Innovation is doing. Nothing much. I think that we have a situation where, let's see, the 2-year, 10-year, what do I want to say? So I think that's really it for this one. It's really, you know, gold has done it, looks like gold is coming out. We have the S&P and the major indices kind of still, you know, working their way, still working that transition into a downtrend. You know, here we have the industrials are now below that 200-day moving average. The S&P is below that. Oh, it's not. It's getting really close to be below the 200-day. You know, it's really working on it and trying. And then we still have in the mid cap sector, you know, last 4 weeks it worked its way up on a weekly basis, but this is where they fail. You know, they fail at the moving average in this 10-week, 50-day is, you know, it's failing up there. So I don't think anything's changed. The Fed is still going to do what it's going to do. Will Russia invade Ukraine? Who knows? But in a way, was the market hoping that, you know, that would happen and it would distract the Fed from following through on all that stuff? I don't know. So that's it for this one. Talk to you later. Bye.